Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate. We've got longtime fools Lou Whiteman and Rick Munarriz giving a 1 to 10 rating to the owner of Viking Cruises. It's Viking Holdings, ticker symbol VIK. As always, we'll rate Viking's business, its management, and its financials. We'll talk valuation. If there's time, fools, we'll play Armchair CEO, and we will top it on about 12 minutes or less. So let's get to it. Lou, let's talk about Viking Holdings business, rated on a scale of 1 to 10. 10 is invincible, 1 is hopeless.
So I'm at a 7 here. And look, I mean, I'm not going to talk about cruises nearly as excited as Rick will, but I really like what Viking does here. Viking does these river cruises, these smaller boats going up and down rivers, kind of, giving you tours of Europe, of the Mississippi River, all these things. I'm not a huge cruise person, but I love this model. They're a big player where it comes to these just kind of niche business, a loyal customer base, creating repeat business, a lot of very different experiences to offer. It's not just all get on a boat and go to the ocean. And look, 14% compound annual growth rate over the last decade. That's a solid growth story for me. The blemish here is it is a cyclical industry and consumers tend to skimp on vacations before they do putting food on the table. But even there, Viking is somewhat differentiated just because of the variety of what they offer. This is a solid business. This is a solid 7 for me.
Yeah, and I have an enthusiastic 9 here, just to live up to Lou's hype of how happy I'm going to be. But yeah, as he mentioned, this is River Cruise. It's not NCL, Royal Caribbean, Carnival, that have thousands of ships. 80 of its more than 90 ships, even though it has a lot of boats in its fleet, are small river cruises, long ships. These take on between 80 to 190 passengers, unlike the 3, 4, 5,000 passengers you can get on the major cruise lines. And its primary market is North American outbound passengers. These are outbound people that live in the U.S. and want to travel somewhere. And more than half of its trips are to Europe. And basically, they're going to go see the rivers. You want to see cruise the Nile on a 12-day Pharaoh and Pyramids tour. You want to go the Danube, wherever you want to go, even the Mississippi. You're not going to take it on a big vessel. So you're able to do this unique experience. Clearly, a very specific boutique product. For an older audience and a very affluent audience. The average cruise is about $7,500 per person, unlike it's 4 times what it would cost to go on a Carnival cruise of the same length. But again, there's just so few cabins to fill. They don't have to have such a big market for that. And specifically to the company, they have more than 51% of the North American outbound river cruise market, more than 3 times its nearest competitor. It recovered a lot faster from the pandemic than its the larger mainstream cruise lines. It turned an operating profit in 2022, a year before the rest of the players did. So, to me, it's a steady business, and I give it a 9.
Having not being an active cruiser other than like an hour at tourist type of things, I'm learning a lot on this one before this episode. I thought it was the same as those other carriers. Hopefully you all are learning some stuff too. Let's talk about management, Lou. Scale of 1 to 10. 10 is Warren Buffett, 1 is Homer Simpson.
So overall, I'm at a 7, but I'll tell you, for the CEO, Tor Hagen, I'm pretty close to a 9 or a 10. Like, he's been captaining the ship. Since it was founded in 1997, a longtime veteran of the shipping and cruise industry. He saw an opportunity and went for it. It's a great story. It's not the American dream because he's not American, but it is just that great founder story. We spoke about, what a growth story. And he's not only had this vision, he has really executed. So real strong points here. Downside here, what brings it down to a 7 for me is he is in his 80s. So you have to think about succession planning a bit. They have a good bench, but they also have Tor's daughter serving as executive vice president. I would assume she's the next CEO, and I sort of mixed feelings there. Nothing against her, and she has trained under it, but every time I see just a child kind of taking the reins, very few children are exactly like the parents, so that just gives me pause. We'll see. Focusing on the present, not a lot to dislike here. So overall, still a really strong 7.
All right, I'm going to go with an 8. And Kareem, it's not a Nepo baby situation, Lou. This is the daughter of an 81-year-old. I think she's in her 50s. So she's been there a long time. But again, the Tor, great story. And again, in the 90s in Norway, so Norway is where he's from, obviously. And he actually ran a CEO of a leading Norwegian cruise company, not Norwegian Cruise Line, but a Norwegian riverboat company and river cruise company, and had cancer. And the company basically just ousted him. And then at 54, he recovered fully from the cancer. And at 54, said, I'm going to start again, and got some partners, bought 4 ships, and gradually has built this up to this 92, 93 ship empire. Amazing story. Karine, as you mentioned, she's the daughter. She's the VP of product. So she's basically branding and product development. And if you ever go to either the Viking YouTube channel or anything, she is the face of Viking. She's providing all these new itineraries. She's the one doing the tours and stuff like that. She speaks a zillion languages, lives in the U.S., unlike her father. And again, to me, they own the majority of the company. They own the voting majority of the company. So if you're buying into Viking, you're not buying to vote. You're buying just because you believe in their vision. And again, I give management an 8 in this case.
Let's move on to financials, Lou. A 10 is a fortress. A 1 is yikes.
So this is a good time to note that this company's only been public for a few months. So everything we're looking at is kind of new. I tend to shy away from recent IPOs. Auditing of private firms is fine, but, it is... When you do an IPO, you put your best face out there. So it's kind of good to look. I ended up at a 6 here because, look, everything looks fine. Not a lot to complain about, but we are still early in the story. Love the strong growth numbers. There is a little bit of debt here, $5 billion versus I think a little under $2 billion in cash. Nothing they can't handle. Seems like calm sailing for now, but we have just left port, and you want to get this journey going a little more before you make a really bold pronouncement about how it's going. So I landed on a 6.
Yeah, I went with a 7. So if you back out the IPO related losses over the past year, Viking is in pretty good shape, and those are one-time losses. Trailing revenue. Right? One thing about the cruise industry in general, everyone thinks, it's going to be so long for them to get back to pre-pandemic because people don't want to go on boats after what happened in 2020 and they were down for so long. Look up any cruise line, how they're doing now relative to 2019. It's going to be impressive. In Viking's case, it's really impressive. Trailing revenue is now 54% ahead of where it was in 2019, and trailing operating income as of its latest quarter is now 64% ahead of where it was in fiscal 2019. So the business is doing well. Lou mentioned the leverage. Yeah, it's a debt to enterprise value to debt. Debt to EBITDA multiple is 4.5, which is a little around the same line as Royal Caribbean, and actually better than Carnival and NCL. So, but again, leverage is comparable within the cruise industry. A company that's done a lot of smart things. I am fine with its financials, given the ups and downs of the industry. I went with a 7.
All right, Rick, let's put our money where our mouths are in terms of valuation. Let's see how well you think Viking stock will do over the next 5 years and how safe it is. 10 meaning a sure thing, a 1 meaning a lottery ticket.
Yeah, so I went with 15% plus. So obviously the high end of the spectrum. Again, I'm really enthusiastic for all cruise lines, Viking in particular in this case, where they have this market pretty much all sewn up. And again, my safety score of a 7 also ties into the fact that this is a business that all cruise lines right now, all 4 of the major cruise lines publicly traded, have record bookings right now where they are this year, whereas they were at any point at the end of the summer, the important summer season. In August for Viking, they were 95% booked for all of 2024. So if you wanted to sail on a Viking cruise ship, on a Viking river ship at any point this year, and you called in August, there was very few rooms left. I don't know if there's any left now. We'll find out when they report again in November or some point. And again, they're 55% booked for 2025. So this is already in August, a year and a half out, and they already booked all of more than half of 2025. Again, a very safe situation as far as near-term visibility. If Social Security payments, go down, a lot of the retirees may struggle. The economy takes a hit. A lot of things can hurt the cruise industry, but right now I think Viking's in very good shape. I call it safe. Maybe 7's a little more overly aggressive than I should be with that, but I'm going with that.
Yeah, I'm a little more skeptical. I mean, the argument here, the bull case is winners win. And, Viking has done a really good job. We talked about the growth. I don't know why, it's going to stop. So I ended up at a 5% to 10% because, it does trade at 30 times, I think, future earnings right now. That's nearly double the multiple assigned to Royal Caribbean, the best of the big 3. Different business, I know, but that is really expensive for a cyclical industry. Cycles happen. Demand slows. I'm going with market performer over the next 5 years with big growth long term. Safety wise, this is about as close to a 10 in the cruise industry as I could give for a lot of reasons Rick gave, but it is still a very cyclical cruise industry. So I'm only at a 5, unfortunately, just because I've seen with airlines, with cruises, just for these heavy asset businesses, there can be times where things go sideways or begin to sink.
In the interest of time, we'll skip Armchair CEO and go right to top it. Rick, is there a company in Viking Holdings space you like more?
Yeah, so obviously I really like Viking, but I'm going to go with Royal Caribbean here. Again, Viking trading at 18 times next year's earnings is interesting. Royal Caribbean trading for less than 15 times earnings, next year's earnings is even more interesting to me. Royal Caribbean, the stock basically has done more than doubled over the past year, and comparable to its peers, to Carnival and Norwegian Cruise Line. Historically, it's been the one with the higher margins. It has a higher market cap than Carnival, despite being lower revenue and a smaller fleet, because of its excellent high margin, high profitability. Just really the class act of the cruise lines, of the three major cruise lines, is Royal Caribbean.
So similar to airlines, I as much as I'm bullish on long-term travel demand, and I've spent most of my career watching travel, I am bullish on cruising. I'm just hate picking winners and losers in this space. I hate owning individual airlines, and I don't really want to own individual cruise lines. I ended up going with Booking Holdings here, BKNJ, not really a direct rival, but travel's going to grow. People want to get out and see things. I would much rather own someone that benefits no matter who the winners and losers are among individual companies, and Booking for me does that.
Thanks to both Lou and to Rick. They've given Viking Holdings a pretty darn solid overall score of 7.1 out of 10, with an 8 for the underlying business, and a really good score from Rick, who's much more bullish than Lou is on this. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is an AI play. Till then, Fool on.